Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. For this segment, we're going to discuss the state of the private company fundraising amidst the COVID-19 pandemic. Joining me, we have Carolyn Witte. She's the CEO of TIA. She joins me to highlight key anecdotes on her company's experience raising a Series A round. I'm also joined by Jack Cassel. He's the Vice President of Nasdaq Private Market to provide insight on the broader private company landscape. Carolyn, Jack, welcome. And Carolyn, I'm going to kick it off with you. First, congratulations on your first round of financing. And tell us about TIA and how did this come together amidst such market volatility?
Sure, it's been an insane journey of raising this financing, getting the deal over the finish line right amidst this global pandemic as a female-led company. With 50 employees, one focused on women's healthcare and one that has a physical brick and mortar presence in New York City at the center of the epidemic. So a lot of different factors to triangulate here, and we're really excited about the ways in which we were able to really raise this a substantial round. We were able to close $24 million, the largest Series A financing led by a female CEO this year. And really reinforce the value proposition inherent to our vision and mission amidst a rapidly changing world.
Jack, what's your fundraising outlook in the U.S. for the second quarter and the rest of 2020?
Yeah, so it's the volatility in the market has certainly come into play on the private side as we think of the revenue multiples, as we think of the public valuations that are used as a comp and a benchmark for the private valuations. People have been watching how that settles and how the public companies are trading. So again, they have that reference point. I think what gives us optimism heading through the first quarter into the second quarter and throughout is just the continued innovation that we see in the private markets. Companies like TIA and others across a multitude of different sectors that are just changing the game, that are really solving key problems for companies. Companies on the enterprise side, as well as individuals and consumers on the consumer side, I guess. So we're optimistic, we're bullish throughout the remainder of the year. And I think it really, again, comes down to the attributes of the company. It's the management team, it's the problem they're solving. Obviously, it's the addressable market. So a lot of those key elements investors are asking on the private side. And if you have the right story, as well as the right team in place, I think we're going to continue to see a lot of velocity and volume on the private side.
Carolyn, let's discuss lessons learned. What worked, what didn't work, and what advice you have for other founders.
So TIA is about a 3-year-old venture-backed startup. We raised a seed round prior to this and are lucky to have a group of very supportive investors who believed in our long-term vision and helped us, work through this really substantial Series A financing. I think what really enabled us to be successful here, and the lessons that I would share to other founders, is a few things. First and foremost, a steadfast commitment to a vision. Building a company, particularly a full stack healthcare company that has walls, doctors, technology, is operationally and capital intensive and takes time. And I think in the venture capital world, it feels oftentimes like these are quick successes, and it really took us 3 years to build a really end-to-end patient provider facing technology platform connected to real world care delivery, and importantly have the data to show investors in the markets that what our model was really working, and the success of our financing is a testament to that. So having commitment for the long haul is the first thing. The second is really being nimble, and that's really inherent to any startup, but finding that balance between being committed to your vision and your mission while evolving the model, the playbook in real time, in response to the market, in response to the world, and finding that balance of how to do that. For us, TIA started out as a digital-only platform and evolved to this full stack model where we have physical and digital legs today. And amidst COVID, of course, our thesis was stress tested yet again. We had to close our first physical location in New York City temporarily and launch a virtual care platform and prove that we could scale, and that what we were doing was not limited to a 4-wall box. And I think really the investment thesis is proving out even stronger coming out of this crisis. And that TIA really is a company that's innovating on the future of care delivery for the most valuable customer in healthcare, women. And where and how we deliver that are really just byproducts of the time. Those things will evolve. And if you have a product and a vision that aren't specific to a trend per se, but are really getting at a core problem facing your customer or a massive market like we are with women who control more than 80% of the US healthcare dollars, you can connect those dots for investors. That's a really powerful story.
All right, and Jack, let's discuss current liquidity pressures and opportunities for private companies.
Yeah, so what we're seeing right now, and we have obviously seen this trend for a number of years, but just generally speaking, companies are staying private longer, right? And so there's so much capital in the private space that is continuing to fuel the innovation, continuing to allow these companies to operate in the private sector for as long as they really elect to. That said, what we're also seeing across the board is this fight for talent and this need for liquidity, or at least to offer some form of liquidity to your employees. You have a lot of large companies that are, I don't want to say poaching, but are actively recruiting engineers, executives, strategy people, and offering them very enticing comp packages, one of which is the equity piece of that. And, we're hearing terms now that it is immediate vesting, or, vesting with different ratchets and cliffs, et cetera. So how do these private companies like TIA and Carolyn, how do you stay grounded, and how do you stay still purpose-driven with a group of employees that might need, again, liquidity? It might be rich on paper, but need cash to take care of their family, especially now through COVID. We're seeing an uptick in these liquidity plans, and it's really coming from a ground up, if you will, of employees saying, hey, life's changed. I know that we're 12 months out or even longer from possibly an IPO. Hopefully we get there. But for me to still work here, I need some form of liquidity. And so for us on the private market side, we're seeing, again, an uptick in volume on that, but in a variety of different ways. We've got the broad-based tender offer programs. We have buybacks that a lot of companies are doing on the heels of a primary round, where the company says, hey, let's let the employees take some chips off the table, or maybe the early founders or executives. And then also in some instances, it's a continuous market, an auction, where we're working off the last round preferred price, but able to create a secondary market that continuously trades for the employees so that they're able to maximize the value of their equity.
All right, and Jack, just to follow up what you were saying before about the IPO landscape, what has the impact from COVID-19 been on the secondary market and the IPO landscape?
Yeah, it's unprecedented, as we continue to hear and say and preach. I will say, if you would have asked me 30 days ago, I probably would have had a different outlook. I think as we marched into this, everybody took a jump back, let alone a step back, but literally a leap back to say, what does this mean for us? They had to look internally at their balance sheets, at their forecasts, at their expansion model. I mean, what really has to change here for us to survive, and not only survive, but continue to thrive? Maybe the growth is not at 40% or 50 or above, but maybe it's 25%, and let us get through this, make our necessary changes, be resilient, and come out on the other side and pick our heads up in Q4 or 2021 with a better story or stronger. So I say that was 30 days ago. Present day, what we've seen is some resiliency in the public markets. I think when you look at where companies and investors can deploy capital, cash is still not a great return on investment. Debt is still upside down to some extent. So a lot of investors are still looking at equities as the primary place to put your capital at work. And so we're seeing a lot of the IPOs that had been pushed out, that were all TBD. They were maybe marching towards a first half 2020 deal. Now they got kicked out to later this year. We've seen a lot of them get pulled up to the June, July timeframe. And typically in finance, August is our dead month. Hopefully both of you get to travel a little bit. I don't know what I'll be doing.
I don't think so for this year.
That's it. That's it. So we're seeing a lot of companies saying, hey, we're going to start our roadshow in late July, and we're going to be pricing in August, which again is now unprecedented on this side of things.
All right, and Carolyn, what's next for TIA? How do you plan to use the proceeds, and are you thinking about future liquidity needs?
So on the proceeds side, we're using this capital to both double down on product development. We have a virtually integrated women's healthcare platform that supports how care is delivered virtually through Zoom, chat, all different form factors and in person, as well as expand into new markets. Today, we're only in New York City. We'll be entering multiple markets over the next 24 months. New service lines will be expanding to support the pregnancy journey and support women throughout the reproductive life. As well as new types of partners, employers, health systems, really leveraging our strength as this front door of care for women for the healthcare system. And that's really, we're excited to prove out, take the model we've proven in New York City and extend that further with this capital.
Yeah, it's really quite remarkable what you've pulled off and being able to pivot so quickly under your leadership. And Jack, to wrap up here, you told us about some of the activity on the Nasdaq private market platform and what that illustrates for the broader market. But going forward, we're learning how to bring all different kinds of companies to market. Do you expect that trend to continue, where it might not necessarily have to be a physical presence, but might be a more hybrid kind of role going forward?
Yeah, absolutely. I think you nailed it, Jill. What we're seeing right now, and I think it's one of the key attributes to Nasdaq. I mean, the genesis of Nasdaq itself is we were the first electronic stock market. So we've always had that in our ethos, and being able to provide liquidity to our companies. And now when you think of the celebrations that the company, an IPO, and this milestone for the company, we are able to leverage our tower. We're able to leverage our marketing assets. We're able to still provide a great celebration for the company, and especially their shareholders and their employees. I think going forward, it's definitely a week by week and month to month type or on a month to month basis as things open up, as companies and executives become more open to traveling and visiting us in New York to celebrate. But I think the resiliency of not only our markets, so we never missed the beat, and we're able to seamlessly trade throughout all of this. And now with the celebrations, we have created a unique and I think a thrilling opportunity for companies to still celebrate this day with everybody, so that they're not missing the opportunity.
Yeah, for sure. Talk about markets everywhere. Thank you so much, Jack and Carolyn, for joining me on Trade Talks.
Thank you.
All right, and thanks for joining us. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.